What the fuck? Are you kidding me? I bought this at 10/9/31. 9/48. That was that loss. This was bought at 9/41. This was got out at 10/56 for a 20-cent loss. After all this move, what was you thinking? Well, being patient. What you was thinking? What you looking for? You was not looking at this right, buddy. You had the opportunity, the emotional momentum, but you got a lot of signs here. Even on the 1 minute, you got a lot of signs. Especially even if you just look at the 1 minute, you got a lot of signs. Okay, you got in here for a call, but you early, you weathered the storm, but your break was below here. Okay, I can dig that. Okay, let me see how we do that. Okay, your break will be below there. So that's your stop. You got in the call. Weathered the storm, weathered the storm. What were you looking for? She said, go to the whole number 638. You should turn around. Yeah, opportunity to get in a short there. incredible. Studying the trade at the same time. I learn more from my losses than I do from my wins. Okay. First problem, going back to this trade. First, I'm gonna put everything up here correctly first. Put a copy of the trade up here. Show what it looks like on all platforms. What it look like on the 1 minute. The first trade, call, 20 cent low. Second trade. Get it to where you can see it. There we go. Yes, sir. Mistake. Real nice, like. Now we want to switch this. If you catch it, you catch it. What I'm putting down. Fool on this trade for real. Look like a damn fool. I'm trying to take a call here. So coming down here. And I'm trying to take a call here. Look like a damn fool. And even once I did be up in the money, I didn't even get out of the trade. After I seen this hangman. That's cornery and buffoonery. Right here. Okay. That's the 5 minute. That's the 30 minute that day. 15 minute that day. Again. Even after this beautiful chart, I sat here and watched this go red. All the way back down, all the way back down. Take an unnecessary loss after you already have a profit. that thought process. Player. Don't like it. Player. Don't like it. Player. Not the correct thought process. Talk about it. This was July 28th. Take that, put that right here. So right here, now we got July 28th. We got what I took, where I get in, kind of lost that it was, what time I got in, and this is what I want to highlight. Right now, I need a little bit of work to do here. And this was some BS. Okay. Oh yeah, gotta be real with yourself now. No freaking reason to be in a trade at all at this time. Freaking unacceptable. Period. In the way of my sis Aisha would say, you didn't even wait for anything. The 5-minute opening range. You didn't wait for the 15-minute opening range. You just went off of emotions. You weren't even looking at pre-market correctly, because if you were looking at pre-market correctly, you would have seen you know, here in the bottom right, even looking at pre-market correctly, you're seeing that we are downtrending, and you only want to buy at an area of support that clearly we had not hit yet. So for you to take a call in this area was just simply preposterous. Simply preposterous. And because of that, you did the next unwise thing that a professional trader cannot do and succeed, and that was you did not recalibrate it. You only waited 10 minutes in between losses. This is unacceptable. This is the reason why we have a rule of waiting 30 minutes if you take a loss. Here is the system. People are not successful. The system is successful. Therefore, people who follow the system are successful. The key to following the system is discipline. If intelligence were the key, there would be a lot more profitable traders, but they're not. What do we say here? Rules for losing a trade. If a loss occurs, let's talk about it. Because losing is a part of trading. Losses are going to occur. You have to expect them. You then have to accept them. You then have to move on to the next trade. This is what trading does. Okay? Okay? Trading is not about winning or losing. Trading is about performing. Your job is to perform and execute your plan every time, regardless of what happens, regardless of how you feel. We remove all emotions from our performance when we come up with a plan. Part of that is having rules for losing as well. If a loss occurs, this is an emotional trigger. This is an emotional trigger. The very next, look, damn it, I even said it right. I ain't even look at this right here. Man, I can't believe I said this. I said this and didn't even read it. What in the world? Googity Bob. The very next trade will be a loss too. Unless you wait 30 minutes before taking another trade. Because you have entered the fight or flight response part of your brain. For some of us, there's two ways of doing that. For those of you who are gamblers, you want to gamble. You want to gambling. For those of you who, like myself, you are a fixer, so you want to fix it. You think you can fix it. Oops, I didn't mean to take that trade. Oops, I didn't mean to take that loss. Let me fix it. And that fix it part of your brain is based on emotions. And then that causes you to take a trade you have not planned for. See, the worst thing you can do as a trader is to take a trade you have not planned for, and then to not take a trade that you have planned for. So, that was off the chain. So again, getting back to what happened here, it's completely unacceptable because I should not have even been in the trade after taking that first loss. Okay. So what I'm doing is I am analyzing my trades for the week, going over my trades. seeing what I did right, seeing what I did wrong, but more importantly, I want to study my losses. I try to absolutely practice what I say to the team by way of studying your losses. It is our losses that will make us money. We can always perfect taking more profit, but the key to trading is to become the best loser. The key to trading success is to become the best loser. Let me see. Let me look. I'm sorry, guys. I haven't even been looking at the chat. See the difference? I haven't even been looking at the chat, guys. But I want to give you a shout out to those guys that's on the chat. Johnny Patterson. SPY definitely coming down Monday. It's going to shoot up, then crash down, I think. I think so too, John. Excuse me, guys, for being late. I'm just going all the way back. I just wanted to share what I'm doing because I'm also streaming on Kick also. So I am I'm journaling, doing my form of journaling where I go over and record all of my trades. For example, this is my trades for July, and I have something for every day of this month, and it's just so happened that this was the last, days of this month running into the first of the new month. So I'm just simply going over my performance, seeing what I did right, seeing what I did wrong, and then I'm putting it on a chart, copying it, writing it down, and making comments on it that I can benefit from. And this is the same thing that I encourage the team to do. And I'm just on a Saturday just in here streaming it. What I do, that's all. I do this anyway. So for me to be able to stream it and get some more hours streaming, is what I'm doing. And I tell you why. Because, guys, I don't charge on the channel. I don't charge. And because I don't charge, I then try to make money from my views from YouTube. So you guys subscribe, it helps me out. The likes help me out. The super chat help me out. But I don't charge because I feel like there's no reason to. Because no matter where you get to on this journey, in order for you to become successful, no matter what system you learn, you're going to have to customize it to your very own. You're going to have to make it your very own that fits your personality, that fits your risk tolerance, that fits your goals, your financial thermostat. We've all been hoodwinked. We've all paid thousands of dollars. I know I've had tens of thousands of dollars to these fake gurus out here, only to come out to find that in the very end, the thing that is going to make you successful is what works for you, what works for your personality, what works for your risk tolerance, what works for your financial thermostat. Where's your financial thermostat set at? Some of us are set on different level. Some of us have to recalibrate our thermostat once we realize what is truly possible in this trading. Let that marinate for a moment. And then so in doing so, this is some of the work that I put in on the side. And just by me broadcasting it, because I now stream on Kick, it just gives me an opportunity to make some money from the stream, and at the same time continue to share my journey with the team, what I'm doing. So if I can benefit, so be it. I'm just showing you what I do. I don't claim to be a guru. I don't have a course. I'm not selling anything. I'm not involved. I'm committed to making multi millions in the market. I'm committed to it. You know, the goal for myself, you know, based on the system that I have created, that I want to share with the team, we have the ability, you know, to make large sums of money every day. But that also requires a level of professionalism in our approach to the market. Even though we are retail traders, we still have to put in the same form of professionalism in our approach to the market, even in the way we dress. That's right. This is my opinion. So let me state that. This is my opinion. But even in the way we dress, even though we are at home, are you treating this like a business? Even in the way you look, in the way you approach the market, in the way you come to the market. Are you getting up even looking like, so you can have the feeling like you're ready to handle some business? And this is, you know, is key in our overall approach to the market in every aspect. You know, what time you go to bed, what time you get up, what do you do before the market, what time do you get ready for the market, you know, on the weekends, you know, what are you doing? Are you reviewing? Are you going over, you know, critical things that you need to be able to create some data that will be beneficial for you to use in the future? So you can, based on data, identify what is an A+ setup. Based on your proven data, this setup you make the most money on. That's your A+ setup. Not what you think, not what you feel, but what statistically you can prove. This is important because this is when you know when to load up. And I've seen it personally. Shout out to Alex. Shout out Bouse. Shout out Alex MIC. I've seen on Alex's favorite trade, I've seen him go to the bank, take extra money, put that extra money in his trading account. Because his A+ setup had a high probability of taking place that day. And so because of that, he went and put extra money in the bank. I saw it, I've witnessed it a couple times. And watched him make $800,000 in a day. So, but again, it's your approach. Stephen Ducks. I almost gave Stephen Ducks, I think like $7,000 or $9,000. I don't know how much it was. But when we came down to closing a transaction, I said, let's do a face call, a FaceTime. So we did the FaceTime, and it was at his office, the same one that on his videos that he was on at his, you know, at his house, his home office at his house. Same desk, same computer setup, everything. But it was somebody else. You know what I'm saying? It was another gentleman who was conducting the business. So I'm like, all right, cool. All right, you know, I wasn't expecting you, but no problem. I could understand if he's got somebody conducting his business, you know, per se a little bit. So, you know, how you doing? Tell me, you know, how have you benefited from being so close to Ducks? Because I'm like, you know, if you conducting his business, sitting in his chair in his crib, collecting this money, man, I can't imagine what your trading has got to be like. Because you right there next to the Wiz kids, you dig? And homie was like, nah, man, I don't trade. And I was like, what? And he was like, yeah, I don't trade. I was like, you don't trade? You don't trade at all? He was like, nah, it's not my thing. I'm more into, gaming and stuff like that. And I was like, Scraggy? I'm like, red flag like a mug. Like I said, I think I was about to spend about 9 bands. So I'm like, I'll tell you what. So where is Ducks? So he's over here. He's in the room. On the phone. I said, okay. I understand all that. He on the phone and all that, but do me a favor. Tell him to just, stick his head over here in the cam and wave high. Give me a salute, thumbs up, pound, anything, just so I can visually see him. Because I don't really feel comfortable with you. Because you don't even trade. So me about to give you understand, my money? Nah, I don't really feel comfortable with that player. I think I need to see Ducks. And then so Ducks wouldn't come get in the damn camera and say what's up. And say thank you. Even in sign language. Nigga, I'm about to give you $9,000. You ain't gonna get in the camera? And I'm at your crib. We're already on a video call. We're already on a video call already. So you're not going out of your way to, you know what I mean? You don't have to come in the room. You're already in the room. According to your guy. You feel me? So, I was very disappointed. Nothing to say. And then I just was like, nah, I can't get this guy my money. Because I wasn't feeling the non-hospitalityness of that. And you got somebody who's not even a trader trying to collect large sums of money, and this guy's not even a trader. That just wasn't even smart. Like, out of all the people you could have chosen to help you out, you know what I'm saying? You're selling your course. You're selling, what it is that you do, the way you do it, the way you gather your analytics. And you got somebody who's collecting damn near $10,000 who don't even trade? Nah, Scraggy. So, but anyway. The bottom line is, you definitely need a system, a proven system with edge. Once you have a proven system with edge, then you need to practice that system. Once you have practiced that system and have proven that the system works over a lot of trades, okay? And a lot of trades could consist of about 20 trades. Once you have proven that your system is effective over about 20 trades, now you're able to get and put a percentage number on the winning rate. Now you're able to say that this has a 80% win rate, 90% win rate, 72% win rate, because you've done it over a lot of trades with the exact same setup each and every time over a set lot of trades. And that lot has got to be at least 20 trades. It could be 25 trades. It could be 30 trades. But it's got to be at least 20 of the exact same trades. Shout out Mark Douglas. This is how you gather statistics. Your stats. Oh, man. Going back looking at this here. I wanted, but I didn't perform to the best of my ability. So much was left on this. So much was left on this. And I need to actually review it as if it was a loss and see why didn't I get a bigger piece of this meat. Okay. And this is just me reviewing, this is just me doing me, you know? Maybe you might want to take this time while you're watching me pull up your charts, pull up your trades from this past week, and let's go over these trades. Okay? Now, I already got the stats and everything, and I'm about to take the picture, but I just wanted to look at it real quick and see why didn't I grab more meat of this trade. We had the gap up, okay? And I'm looking at this candle by candle. I can understand this. All right, let's say the first 5-minute opening range. If you use the first 5-minute opening range strategy, you did have an opportunity to get in this in and at the 9:45 candle, which is also would have been the equivalent. No, it wouldn't, because it wouldn't have closed yet. So yeah, you would have had to use a 5-minute opening range. 15-minute opening range would have been too late. But at that 9:45 candle, the beginning of that 9:45 candle, you could have entered a put. Right there. You could have entered a put with a stop above the candle itself after it briefly went from green to red and started trading beneath even more so. Let's make it even real clear. Underneath the low of the most recent 5-minute candle. Your stop could have been here. Beautiful. Above the candle itself, not once, and you really could have taken advantage of that. So again, I made money in this. I'm sorry, I don't know why I said that's saying loss, because that's not a loss, that's a win. %, 14%. Okay. 100 contracts, that's $2,000. 100 contracts, that's $1,400. But seeing why didn't I get in it earlier and seeing where I could have, and after the gap up, you know, as our teammate Brooks always remind us, we typically do cover the gap in that case. It absolutely is what took place. For some reason I have a line here at the 637, so we had the gap up to the 638.6, and then she came down and closed that gap. Now looking at how I traded this, what was in my mind, I traded the close of the gap. My entry could have been a little better. Could have been a little higher. It could have been a little closer to the 637 itself. Okay. Realistically. And my stop still could have been above my very entry candle. It wouldn't even have been all the way back to resistance. My stop could have been above my very entry candle, and even with this retest of the gap area, the 637 is still nowhere near my stop. If anything, it's a place to add. If anything, that retest is an opportunity to add. She then stayed below the 5. You see the 5 crossing underneath the 20, the 5 and the 20 EMA. For those of you who follow that SMA, 5 and 20 SMA. Bam. Just beautiful. Beautiful. All the way to when the chart says, okay, it's time to get out. And the chart just said, it's time to get out. Ebb and flow. This is just magnificent. This is poetry in motion. But the market tells you where to get out. This is poetry in motion. For truly, that would have been the best exit right here. Just simply marvelous. Once this beautiful hammer showed up, if you didn't know when, that is exactly when. So that is what the trade gave. A beautiful gap and crap entering on the 945 candle would have been the best. Would have been the best. But even if you wussed out like me and you waited until the gap closed, which is now intraday, a break of demand, a bona fide, solid break of demand. Okay? With that being done, even with my candle, there should have been no reason to get out. And I'll have to look at the replay to see why I got out. There should have been no reason to get out, because this is the regular candles. So I know the Heikin-Ashi is really looking crazy. Straight red. Look at that. Heikin-Ashi straight red. No reason to get out until the Heikin-Ashi turned green. And exactly where I put my exit arrow for the best part of that trade is exactly where the Heikin-Ashi also changed colors. This is what was available. Yeah, I got a little bit, but boy, there was a lot more meat on that bone. I will go back and replay that and look at that. Even if I didn't get the very best exit, even if I follow my rules, waited till after 9:45, then waited for that 9:45 opening range move, then waited for the close of the gap, I still had a beautiful entry, even though it could have been a little better. Could have been a little better. I got in at the 636.8. Could have got in at the 636.7, which is where I want to get in at. Using the same entry candle as my stop. Beautiful drop all the way down to the 635. Really, you wouldn't have got all this 634 because you just still would have been amazed it was still dropping. But once she came back and closed and formed a hammer, you knew it was time to get out. That would have been your entry, your exit at the 635.1. You know what I mean? Worse, 635.3. Because now we're trading above the hammer. So, man, you gotta love this. You gotta love it, man. It's the only way you're gonna get better is to even look at your wins with criticism. Like, I could have traded that better. That could have been traded better. know what I'm saying? Good. Good is okay, but good ain't good enough. Good ain't good enough when great is on the table. I'm not after the money, and this is what I be telling you guys. The difference between being involved and being committed. We're not chasing the money. We're making money. $100 shares is $2,000. 100 shares is $1,400. We're making money. We're not chasing the money. We're chasing excellence in trading. We're chasing excellence in trading. Look where I got in. Look where I got out. You automatically know I made money. I don't have to tell you I made money. If you're a real trader, all I got to do is show you where I got in and show you where I got out. You understand me? Let's pull up the chart. Pull up your stats. Okay? Show me where you got in. Show me where you got out. Oh, Chris Sane. Talking about he make $10,000 to $40,000 a day. Boy, I swear you lying. Okay, stare that guy. But he is getting some good YouTube money, though. I respect the hustle. So it's easy to take that YouTube money and put in your trading account and trade with 100 contracts. It's easy to do that. But once you get to explaining what you're doing, that's how I know you don't know what you're doing. That's how I know you're lying. Blind leading the blind. All right, that's what went down. This is the screenshot. And I want you guys to see something, okay? I want you to see something real quick. I'm going to title this screenshot July 29th because this was July 29th trade. Okay? So July 29th trade. Shout out to you, Ken Mack. July 29th trade. Alright. Now I'm going to take that, put it over here on my other chart. Y'all going to have to excuse me in a minute. I feel a boo-boo coming on. But I have copies for every single trade I've taken this year. I have a snapshot of every single trade that I've taken this year. I have a snapshot of every single trade I've taken this year. And that's what I'm using as my data. That's what I'm using as my guide to study. That's what I'm using to gather my statistics off of. That's what I'm using to determine where I want to go next. That's what I'm using. This is how I'm studying on Saturdays and Sundays. I treat Saturday and Sunday like it's a Wednesday. People say, what you doing on the weekend? I said, studying. Monday, stocks. Tuesday, stocks. Wednesday, stocks. Thursday, stocks. Friday, stocks. Saturday, I'm studying stocks. I'm reviewing stocks. Sunday. I'm freaking thinking about stocks, wishing it was Monday already. I'll be right back. Let me be right back. I'll give you some education to look at while I'm gone. Oh, my stomach hurt. I need to excuse myself, but I want to give y'all something positive to look at. Then I'm going to come right back and pick up with July 30th.
Okay, time to get started. Right, I'll just give you
Very important. I'm going to share some with you guys real quick. Yeah. Here we go. Yeah.
Nobody wants to do the work for themselves. Everyone wants the magic bullet. Oh, give me the strategies, give me this, give me all the advice I need, point and click on my mouse. It's like, no, you gotta go through the journey yourself and figure it out on your own.
I want to ask you more about just how you're able to keep such a high level of performance, because I know that has to be taxing. And not only that, but like, what do you do to maintain it too, right? Not only reach it, but like maintain it.
Yeah, and it's like I often tweet about, like James Clear. And once you experience it, you're like, man, I can tell other people, they might not believe it either, but like, it's still true, and it still needs to be said.
I love that you said that, because I know a lot of people maybe just
Hello everyone, I'm Lance Breitstein, and I will be presenting for S&P to Unfold that day. The other thing with obsessing over P&L is it doesn't normalize for the opportunity set. Is a 10K day good? Well, I don't know. If it was a very difficult, tricky, trappy day and everybody else was negative and you did 10K, yeah, maybe you traded very, very well. But if you put up 10K and this was one of the biggest days of the year and everybody else put up 100K, then maybe you didn't perform so well. So P&L really doesn't tell the whole story anyways. And regarding that, trading is so probabilistic, negative days really are an inevitability. It's something we all must learn to accept as part of the job. And so many people might say like, oh, how do you deal with down streaks? How do you get through this? But that is just a core fundamental part of this job. We will deal with negative days. And the other paradox too, if we focus on our P&L, is the bigger the trader you are, the bigger your negative days become. So if you ask any top trader at any firm who has the biggest negative days, it's probably them. But that doesn't mean they're doing anything wrong. It doesn't mean anything, right? It's just not the appropriate indicator. Then, much like one of my favorites, James Clear of Atomic Habits would say, P&L is a metric that is a lagging indicator. It does not speak to what you're currently doing to improve, which will then have an impact on your future P&L. And all you really need to be concerned with is the future, not the present or the past. In an ideal world, what we really want is to focus on our expected value and to obsess with this and this alone. And the way I do this is that bobblehead concept. So if you take a chart where on one axis it's your daily expected value and on the other it's time, over time all you want to do is steadily increase your little bobblehead and imagine your head shifting higher. So maybe if you're a trainee, your expected value each day might be negative $50. But after a couple months, maybe even 6 months, who knows, you reach that break-even point where on the average day, you're now a positive trader. In fact, you're approaching consistently positive. And from there, you try and grow and grow and grow, improving not just the number of days you're green, but also the size of them. And so really what you want to think about is each day, how can I make it so that my time in front of that computer or at that desk is worth more and more and more, so that on average, I'm putting up higher P&L. And so really, if you think about it, all that matters with your P&L is what's your expected value each day. And what this does is it makes you agnostic to the actual daily performance or the opportunity set. It doesn't matter if the market was tough. It doesn't matter if the market was easy. It doesn't matter if you have a good day or a bad day. No matter what, you're able to win the day. So what I mean by that is so many people, if you have a P&L obsession, you might have a negative day. And with that negative day, you might say, I'm out of here, I'm frustrated, I'm gonna go to the bar, or I'm gonna go to the gym, or I'm gonna do whatever I can to avoid coming face to face with what was failure today, or at least what your P&L says is failure. But if instead your obsession is on the expected value of what you could be doing better, you view that way, way differently. Instead, you say to yourself, how can I improve? How could I have made more P&L? How could I have lost less? What could I have changed? How could I have spotted more opportunities? And so what this mindset really does is many things. And I think mindset coach Ben Crow, who was the coach of one of the best female tennis players in the world, says it best.
There's two expectations that are kind of killing performances all over the world. In fact, they're probably killing the world. One is expectations of outcome, which you can't control. And the other one is expectations of others, which you also can't control. And focusing on something you can't control but wanting to control it is the definition of anxiety, or stress or pressure or worry. So the process is about accepting the things you can't control and letting them go and getting them out of your psychology and focusing your attention back on the only thing you can control, which is how hard you train and your intention, and also the words which represent the best version of you. And if she can accept the things she can't control and have confidence in herself, that's the only expectations she can put on herself. Her goals and her dreams, and she's spoken publicly about her goals and her dreams, and she's put that out in the universe, and she's going after them as hard as she can, right? And that's just called living.
What Ben's talking about there is you can't allow these external measures or the external expectations to affect your performance. All you can focus on is what you can control each day. So now here's one of the best parts about this mindset shift. What people don't realize is on those losing days, especially those really, really, really bad days, if you lost 150K in a day or more, or any big rip for you, you might think it was an awful day. But if you truly internalize this mindset, what you eventually realize is this is a great thing for you. This is an opportunity, because the market just revealed a flaw in your system and a flaw in your trading that you can now fix. And when you are able to learn and take lessons and fix those issues, these opportunities actually provide the best times for you to increase the expected value of your bobblehead. So let's say there's a market that punishes overtrading, and due to these losses, you learn how to counteract in that, how to be more disciplined and more selective. Those losses are actually increasing your long-term P&L. It's making you more adaptable across markets. It's making you a more resilient trader. It's making you a more mentally robust trader. And it really allows you to keep the big picture in mind, right? We don't want to focus on our P&L over the next day, the next 2 days, the next 5 days. We want to focus on the next 5 years or the 10-year game. And what this allows you to do is progress every single day and raise your expected value with the big picture in mind. Really, as counterintuitive as it seems, your lifetime P&L is only 2 variables. 1, what's your average daily expected value, and 2, the number of days traded. And if you really truly focus on just increasing your bobblehead each day, you're maximizing the expected value of your time in that seat, but you're also doing it in a much more sustainable manner. You're removing your frustrations, you're minimizing your stresses, and you're focusing on the journey and process rather than having to live with the ups and downs that are designated or dictated by a P&L swing. And so what does this mean in practical applications? It means that as I chimed at the beginning of this video, I would always say, hey guys, let's stop comparing P&L and let's go back to moving our bobblehead higher. So much time after the close is spent asking, oh, what did you put up, or what did you make in, or what did you do this? And it's not about that P&L, right? It's really about what can I learn from what you did today, or what can I learn about the opportunities? And the more time we can move away from asking or caring about P&L and more about what we can learn, the more effective we will become. And again, like I said, this minimizes psychological stress. It can always be so defeating and so depressing when you take some big rip. But what if instead we just said, this is an opportunity that's going to make me better in the long run? Why? Because I don't care about the here and now. I care about where I'm going to be in 5 years or 10 years from now, because this is going to be part of the process to become the best version of myself. Nano, one of the traders here, I have been helping out as he's recently experienced his first major drawdown. And in the last monthly meeting, he said something that was just so important to me. He recognized how this process was helping him to become a more robust, more diversified trader. And even cooler than that was he learned about stoicism. This was a topic that I love to learn about, and I think it makes you a better person. It makes you stronger, not just in trading, but in all areas of life. So regardless of whether it takes him a day, a week, a month, this is something that's giving him skill sets to succeed for the rest of his life. Additionally, when you focus solely on the process and your expected value, it allows you to remove limiting beliefs, because there are times when, like, if you're focusing solely on the P&L of others or yourself, it has nothing to do with what your true potentials could be. And I remember when Bella told me, Lance, you have a lot of talent, and sometimes if you're comparing P&L solely to those around you, you're never allowing yourself to separate from the pack and really be the maximum of your potential. And it's so true, because all I needed to do was just focus on getting better every single day, and that's exactly what I did. So some final thoughts. One quote from Mariko Ugeta, who's a female marathoner who ended up doing family, kids, and everything during her younger days. She became the world record-setting female after age 50. And a quote that stuck with me was, "It's a waste of time to think about days gone by. What's important is the here and now and the future. How can you improve yourself in the days to come?" And this encapsulates everything about the bobblehead concept. The more you can remove yourself from obsessing over your P&L, the more you can focus on what matters. Getting better each and every single day and viewing adversity as an opportunity to get better. Not for now, but for the 5, 10 years and the lifetime ahead of you. And then we can get the F to work on getting better.
Hey, go ahead and click our subscribe button so you don't miss any of the videos they're producing for you in the trading community. And please take the time to add your feedback in the comments section for what videos you'd like for us to produce next and what you found helpful from this video. From all of us at S&B, train and trade well.
A little bit tired, but market's gonna open in 30 minutes. Market doesn't wait for anybody. Thinking about my goals, my top 3 priorities for the day, making sure emotionally I'm in the place where I can trade the financial market. Taking a little time to myself this morning for 5 minutes, then I'll head out, get some coffee. All right, good morning. So I'm just waking up now. I'm gonna have a long commute to my office. Gonna get ready to work, make a watch list of stocks I'm gonna trade, but first I need some coffee. Gotta get that caffeine up before we start trading. Trading is a very mental game. You need that caffeine. I know people don't like caffeine, but you gotta get it in.
Wait, I thought that was the coffee maker.
Well, that's the cocktail machine. That's for when you have a great trading day, or sometimes a bad trading day. You can drink your sorrows in there too, but that's for later. I know, right? A long commute, but I'm finally in my office now. A lot of traffic on the way, but we made it into work on time. And now I'm just gonna start making a watch list. So every morning, you know, there's different stocks moving, different stocks you're gonna be trading. So I usually come into my desk 30 minutes before the market opens. I make a list of stocks that I'm gonna be focusing on that day and I'm gonna be looking to trade that day. So let me get to it. Market's about to open in 30 minutes. I'm gonna start making a watch list. All right, so the market's gonna open here any second. I really like the stock Plug. I'm gonna be focusing on that as my favorite off the open. But now, most importantly, all we need is a pattern to get in. We can't trade without a pattern. So hopefully Plug just gives us a good pattern that we can catch a good trade on. All right, so the markets are now open. I just got into this Plug at 34.60. Nice candle. Put in a green candle off the open, so hopefully this trade can keep going for us. So as I was talking about, my favorite today was a stock called Plug, and that's the one we ended up trading today. So I bought the stock at 34.60. I was roughly risking about $1,000. So if the trade didn't work and it came all the way down, I would have lost $1,000. But in this case, the trade ripped, it went in our favor, and we actually ended up making almost 3.7 times our money, which basically means if you're risking $1,000, you should have roughly made about $3,700. As you can see here, that's exactly what I ended up making, about $36.78, which was for a good day's work. So now let me show you what the reasoning behind the trade was, what was the exact pattern that it ended up trading. So as you can see here on the left, this Plug, this was a resistance. The stock tried to get above this $34 and it came all the way down to 29. Went up to $34, came all the way back down to 31 and did that like 3 or 4 times. Today, it finally broke and got above that area, and that's what made me want to trade this stock. So then on the 1 minute chart, what I noticed here, as you can see right off the bat, you had a candle that took the stock back down. Another candle that was at one point a full big red candle came all the way back down, tested that area. So what was once holding it as resistance actually ended up supporting the price now. Price bounces up, you get a bottoming tail, and I simply basically bought the stock right above this bottoming tail, put my stop loss at the low of the day. So had I lost on this trade, I would have lost $1,000. But in this case, as you can see, right after we got in, the trade just ripped in our favor. And then right over here, I decided to take my profit because that was 3.7 times our money. And I think that was a good trade for literally holding it for less than 30 minutes. So I just found a new trade opportunity here in a stock called Greenlane. It's a marijuana company. It's setting up a really good pattern that I love to trade. And I think it's a good trade opportunity here where we can make a few bucks. So I'm gonna take this trade and send it out to our subscribers in our newsletter, and hopefully they can get it as well. So as you can see here, this stock, Greenlane, has been below the moving averages, below the 50 MA and the 21 EMA for a while. Now it's the first time it's getting above those moving averages and also the 200 MA. I think this stock probably goes to $6. So I'm gonna go ahead and send this out to our subscribers here. I'm gonna send out an email and a text message so that they see it regardless of where they're at. So we're gonna buy this stock at 440. Our exit point, if you're wrong, is 410, and if you're right, the target is 625. So gonna go ready to send it out to our members here, text and email. All right, so I just sent this trade alert out to all our subscribers. Hopefully they get it in time so they can jump on this trade with me. So, you know, as a professional trader, there's always good trading days and bad trading days. So today you got an example of a good trading day, but not every day is like this. Some days things are not gonna work. Some days you're gonna take your losses and you have to be okay with that, right? But in this case, the Plug trade worked really, really well. And now what I'm gonna do is I'm gonna hop into our chat room where we have a lot of students, a lot of members that trade with me every single day. And every single day I try to give them a review of why I traded what I traded, right? What was the reasoning behind it, so they can actually learn while they're earning inside the chat room. So I'm gonna hop into the chat room. I'm gonna teach some of my traders. Feel free to listen in. You're tempted to buy the $155 puts on Nike call options. There's $165 calls that you could sell for 27 cents. Or 160 to 50, but again, it's not that much of a premium to justify that trade. If I decide I want to place an option on a stock moving up, how do I decide which call to buy? Usually the best rule of thumb is buy 1 to 2 strikes in the money, and if it's a day trade, go for a weekly option. If it's a swing trade, go for monthly options. Do you ever buy a stock and then take a put for the same stock? Why would I do that? Because put is betting against the stock, and then buying a stock is betting that it goes higher. Yeah, you're just capping your gains. There's no point in doing that. You might as well take less shares long than try to hedge it with a put. I mean, I know there's a lot of people who like to recommend these strategies with fancy options. I personally think that all these people who do these spreads, these options, these fancy like strategies, they don't know where their stock is going. So they're trying to like do everything with the hopes that they make a little bit. Right? But obviously if you know technical analysis, you know where the stock is going, there's no reason to protect. You just take a less amount of shares and have them hit your target. Right? Look at the markets today, guys. Like we made money today on a day where look what the markets have done. This is where the markets opened today, right? At 9:30. It's almost 12 o'clock. Look where the markets are at. Hope you guys have an awesome one. Hope you guys made money on the plug today. Type in 1 in the chat if you guys made money on plug. Good. Look at that. Awesome, everybody. I'll see you guys tomorrow. Have a great one. Take care.
What happened?
The trade we were just recording on that video.
Yeah.
So it's already at $1,500, and we just spoke about it a few minutes ago. This is where we sent it out at $4.40, and boom, it's at $4.70 in no time. Oftentimes when people come into trading, they want to learn trading, they are hesitant, right? They have things that are holding them back, and rightly so. I mean, it's hard-earned money, right? You worked for it. They probably had another job, and they had to do a lot of things to gain that money to trade in the first place. So it's okay if you're, hesitant, you don't trust it, perfectly fine. But with the right process, it can actually be done. So, oftentimes people would come to me and say, hey, but online it says 80% of the traders lose money, that traders don't make money, or trading is gambling. But what they forget is that in that statistic, they have counted pretty much everybody who opens an account and pushes the button as a trader. But that's not what a professional trader is. A professional trader has strategy, very specific criteria, has very specific entry and exit points, and actually has a method to his madness that has been tested over and over. So if you actually do the math and count how many of those traders who've gone through education make money, 80% of the people actually end up making money. All right, so today we're just out here at a dock in New York, checking out some different boats and different yachts. We have an upcoming event, so we're just seeing which of these boats could fit for this event. I think I like this one. So I think this might work for our party that's coming up. So as traders, as I said earlier, work hard, play hard. This is a great way to meet a lot of new people, network with a lot of people, and build some great connections along the way. If you're working at an office, you probably end the workday, go get some drinks with some colleagues. Trading is different, right? Your colleagues are the people in the chat room. Your colleagues are the people part of the newsletter, your same student peers. So to have a social circle as well as have networking events, you got to make it happen. You can't rely on colleagues. There is none. You're by yourself as a trader. You're a business owner, you're an entrepreneur. Beautiful day out here, checking out these different boats, and I think this might be the perfect one for our party coming up. This is probably going to be for our next event, which is going to be much bigger. Let me show you this boat from the inside. It's literally like a freaking nightclub. You got the bar set up right here. I mean, you could probably fit, 200 people here? It's definitely too big for what we're trying to do for the upcoming event, but I think I have a great idea what we can potentially do here for our next event. All we need is a stripper pole. Yeah, it's like a freaking nightclub. Like, you got the chairs, you got tables, you got the bar, you got the VIP rope for the table, you got a dance floor. You can get one of those stripper poles that attaches up there.
You got that? You got that?
What do you guys think? I think that one worked out well, right?
Perfect.
Yeah.
I like the vision we got here.
No, definitely.
Pack it out. Have one of the best events this summer.
For sure.
Oh, chill. Let's take it for a little ride right now.
All right, let's do it. All right, so we just checked out a few boats today. Some of them were a little too big, some of them were a little too small, but I think we found the perfect size. So the big one probably we could use for a bigger party, but this is more of an intimate gathering on a smaller boat. So today you got a little glimpse of how my day went. Now every day is a little bit different. The day started off with me waking up at 9 o'clock, making my watch list. Market opens at 9:30. We took that plug trade, made some money on it, taught some of our students in our chat room, sent out some newsletters, and then as you guys saw, we went out, checked some boats out for our upcoming event, and all this in only a few hours. It's only 3 o'clock. Most people are still stuck at work. Maybe they're taking their little coffee break, a little lunch break, and guess what? There's probably gonna be another 4 hours till they get back home. So trading, if you do it right, can give you that lifestyle. Now, you're not gonna get that lifestyle from day one. That's what all the marketers want you to think, right? You're not gonna get that lifestyle from day one, but if you listen, if you pay attention, if you have an open mind, you have the willingness to learn, you too can have this lifestyle. This isn't a pipe dream, right? Ask a kid. I mean, this kid came from India, right? Had no mentors, you know, no real money behind it, but I made it happen. So I'm not saying that again to impress you or anything like that. I'm just saying that it's possible for you as well. Hope you enjoyed this video. If you want more content like this, hit the like button, make sure to subscribe, and leave a comment below. Let me know what you think. If you hated the video, let me know what you think. If you loved the video, let me know what you think. Until next time.
Nobody wants to do the work for themselves. Everyone wants the magic bullet. Oh, give me the strategies, give me this, give me all the advice I need, point and click on my mouse. It's like, no, you gotta go through the journey yourself and figure it out on your own.
I want to ask you more about just how you're able to keep such a high level of performance, because I know that has to be taxing. And not only that, but like, what do you do to maintain it too, right? Not only reach it, but like maintain it.
Yep. And it's like I often tweet about, like James Clear always says a lot about this stuff.
And we are
like,
back.
Everything in life is a trade-off. Everything has an opportunity cost. The time you spend on trading, you're not spending elsewhere. And so even we were talking about my time in print.
Okay. Back to the grind. Back to the work. Tracking our July trades. So in my assessment of my trade for July, I'm going to say that this pattern that I attempted to take was a break of demand. However, I could have traded more aggressively and entered earlier. Noted on the charts. My entry was okay, but my exit was not good. Yes, sir. Gotta be brutally honest with yourself. Brutally honest with yourself. Break of demand, I could have traded it more aggressively and entered earlier. I noted that on the charts. My entry was okay, but my exit was not good. Even though we made money, the better exit is noted on the charts. You come, hit it, blow it up, go to the charts. You see I got the better entry here highlighted in yellow and the better exit highlighted in yellow as well. I got the trade that I took there in the middle, but more importantly, not only was I able to capture what I traded, I was also able to capture what I should have traded. Okay? Like I said, even though that was a profitable day. Now we're going to go on to the next day, and that was July the 30th. We're going to go to July 30th. Okay. How many trades did I take July 30th? Let me look and see. And July 30th was a Wednesday. I took 2 trades on July 30th. I took 2 trades on July 30th. I'm showing you guys exactly what I do, how I go through my journaling. The first trade I took on July 30th was a 637 call. I got in at 3 different places. I'm going to do an average. Okay, boom, boom, boom. Need to do an average. Give me a second here. Got in at 257, 244, 243, divided by 3, 248, 248, got out 238. So the first trade was a 10 cent and a 13 cent loss. Percent wise, 23%. And the second trade, what the heck happened here? Oh, okay. I see. Second trade was a quick stop out. Second trade was 637 call. 637 call. Second trade was 272. Trades. So followed the two loss rule. Followed that. So we'll see what happened there. Oh man, this is a winner too. I don't know what I said loss. This is a win. You got to be kidding me. Okay, now let's go ahead and get it together. See what the picture was looking like. It's right here. Okay. See how the inverted head and shoulders. I bought in anticipation thinking we were going to continue to go higher. Very clear to see. Maybe if I could slide over this way, I get both trades in. Yeah. Slow to develop. Clear to see now. Straight up lost, that's all. Straight clean losses. All right, let's get a copy of this day. I'm going to analyze it, because this is where the lessons is going to come from. That's where the lessons going to come from. Oh, I got my mouse. I keep saying I'm gonna buy a new mouse. There we go. That goes for Chris Sane, Wall Street Trapper. How dare you charge people and you can't pull up a track record of every trade you yourself have taken, let alone call people to. You yourself have taken. To show that you really, really do this. That you really, really get down. January. February, March, April, May, June, July. This is not a game. We right here, July 30th. This is not a game. From July 1st all the way to July 30th. It's not a game. We are preparing for the success that we want. And the thing that I want to tell you about success is you got to remember, success doesn't know what day it is. Success doesn't know what day it is. Success doesn't know today is Saturday, August the 2nd. Success doesn't know what time it is. Success only knows, have you done what is required in order for it to show up in your life? And if it hasn't shown up in your life, get back to work. Get back to work. Stay down till you come up. Get back to work. Stay down until you come up. One, two, three, four. Man, that's a horrible day. I already see I broke rules. Just by taking 4 trades. 1, 2, 3, 4. Okay. Let's get to it. First trade, 931. Ain't that some doggone. Straight violation right there. My goodness. Second trade, 935. Ridiculous straight violation. I was on tilt. Out the gate. Out the gate on tilt. Next trade, 949. I was on tilt. Next freaking, you got to be kidding me. Nah, I freaking 50? I did not stop and say, hey, bud, sit your ass down. That's ridiculous. That is ridiculous, my friend. And unacceptable. Ridiculous and unacceptable. Let's see what we was doing here. Ridiculous and unacceptable. Put 640 put. Got in 232. Got out at 210. Got out 22 surplus. What time it was? Just ridiculous. Believe the next trade. Just right behind it. Another 640 put. Another 640 put. I got in at 227. Okay. Oh, I rocked this one, I see. Oh, I killed this one. No, I'm not going to say that. The system worked on this trade. According to plan, best exit, 267, then 253, then 249. Okay. sir. Yes, sir. Let's get it. Going over to work, the due diligence right now. Let's get it. Okay, what do we have here? 249. I'm sorry. 249. Okay. First one was 26. I got in at 22. So 40% winner. And then we have a 2, 3. I got in now at 227. This was a 26% winner. Okay. That was a big winner. Yes, sir. That was a big winner. Going to turn that around. Completely wiped out that loss. and then doubled it and tripled it and tripled it. That's an excellent display. How to come back. Okay, then what happened? Let's see what happened after that. Still don't like it. Traded too early off of this momentum. Still too excited. Came back. Tried to stick my hand in the cookie jar. Took a 636 call. Thinking I was going to catch the bounce. And I did. No, I did not. I caught a quick stop here. Same call again. Got in at 3:22 this time. This time the trade worked according to plan. Used the 85% rule to get back in the trade. And this time it worked according to plan. Took it all to 346 and to 369. Very, very nice. I like that because you see a loss and then a winner 3 times as much. You see a loss and now you will see a winner like that. So that wipes it out and doubles it. Take a loss, triple win. Take a loss, double the amount win. That's great. That's very gracious. That's gracious. Let's see what that looks like on the day. Let's see what that looks like. And then I appreciate me for stopping after that. And again, this was on the 31st. Okay. First trade took place again. Why am I trading so freaking early? I'm just disgusted by this. I'm really gonna get hard on myself, but the beautiful thing about this is something I could change. This is something that I will change. You know, this is just unacceptable. Unacceptable. Because if you just, you know, leave out the foolishness losses, I don't mind taking a good loss. But a bad loss is something, you know, a good loss is a loss according to your rules, a loss according to your plan, because all trades don't work out and nothing is 100%. So even on the best setups that got 80, 90% winners, you're still gonna have 1 or 2 losses, and you don't know which out of the lot size that you're trading is gonna be a winner and which trade is gonna be a loser. You don't know the sequence of orders your wins and losses are gonna come in. So you don't take the trade because you think this trade is gonna be a winner. You take the trade because it's met a set of criteria, you know, in order for you to take a trade with a set amount of risk, with a higher probability of this working over that. And we know that over a series of taking this particular setup, that 80, 90% of the time we are going to be profitable. That is how we trade. Using the 85%. Using the 85% rule, re-enter the trade again. Got in the trade, got stopped out, came right back to my first entry area. Got right back in the trade again. This time using the same thing, my entry candle as my stop. Same thing here, I got in, used my entry candle as my stop, and was stopped out. Okay, got in on this candle, we used that as my stop, and this trade went to profit. That was good. It was a nice comeback. Nice comeback. Switch it up like that. Okay. Go. Took a put, 22-cent loss, 22% loss. Took another put, 40% winner, 26% winner, 21% winner. Took a call in the same candle, got stopped out for a 22-cent loss. Very next candle got in for a call, had a 24% winner, 47% winner. Still left a lot of meat on that bone. See what that looks like. On the 5-minute candle. Interesting. Very interesting. Looks like I really could have waited, possibly. Been a little more patient in the day. Possibly. 10:45. Last day of the month. Trying to make something happen. Definitely see it there. 1 o'clock, you could have waited. A lot of premature trading. Started off that way trading at 9:31. Even though I wound up having a good day, you know, a lot more money could have been made if I would have been a little more patient. Alrighty, that is going to conclude July's trading. That is going to conclude July's. Done with July's. Now let's go to August. And I want to do something else too, if I may. I want to import my trades to Trading View. See if that'll work here. Give me 1 second, team. I'll clear this up.
Okay, time to get started. Right, I'll just give you
Let me tell you a quick story. I started my career with 12 consecutive losing months. Not a single winning month, month after month after month, and endless pain and agony in the process. Fast forward a little bit, and I not only became consistently profitable, but I rapidly became the #1 trader at my prop firm, hitting 8-figure P&L per year in the process. So what was my breakthrough? Well, there were a couple of things, but the main one is exactly what I'll be teaching you in this video. In short, I started focusing on the easy money trades. I made that my sole focus and gained consistent profitability fast this way. And in this video, I'll not only share the ins and outs of such an approach, but I'll teach you the 5 easy trades I used to get to profitability and stay there. So stay tuned. This is going to be more than worth your time. I'm Lance Breitstein, and today I'll be teaching you about a topic that I like to call easy money trades. You can follow me on Twitter at @TheOneLanceB for more content and videos on trading. So let me tell you about a glimmer of hope. If you're struggling as a trader, remember that so was I. I had 12 months of losses. It all seemed hopeless, and I didn't know if I was going to have a career as a trader. But while I was thinking of switching to something else, and quitting the industry, there was one glimmer of hope. And what that was NASDAQ witching imbalances. So for those of you that don't know, on the 3rd Friday of each month, especially each quarter, there's what's known as witching. And that's when a lot of just rebalances are done as far as order flow, and you can see some abnormal moves. And so back probably over a decade ago, what would happen is you would get some of these tech stocks that if the market was, say, flat, just due to excess order flow, they might shoot up or shoot down. And so this was actually a strategy where I would take the other side of these, knowing that it's just order flow due to this witching imbalance, and I would be able to make a couple easy wins. And the beauty of this was it was repeatable, I was able to prep for it, and I was able to quickly build this as like a little cornerstone that I could rely on each month. So this glimmer then became a ray of light because I used that same concept in other areas. Essentially, I started to find order flow inefficiencies and little term plays as well. I'll talk more about these. But what these did is these served as the foundation of my playbook. I was able to use these to then expand into other areas and more. So these easy money trades put me on the path towards consistent profitability, and eventually that served as the springboard to launch me to #1 in the firm.
If you want to learn 3 more real-world setups that our traders use, including the simple setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free webinar that we're currently running. Just go ahead and click the link that should be appearing now at the top right-hand corner of your screen. That will open up the free registration page in a new window, so don't worry, you won't lose this video. You can also visit tradingworkshop.com.
Working on this. We all as traders have a natural human bias towards the home runs. The home runs have sex appeal, and it's so amazing to hear about the trader that had the 6-figure trader, the 7-figure trader, more. Whatever it is that you're looking up to, a lot of traders tend to overlook just the small, consistent, everyday money. The stuff that you can rely on, the stuff that you can use on in times that are good or in times that are bad. Realistically, 2020 and 2021 were home run markets. You were able to shoot out the lights and make more than you ever imagined. But 2022 is far more difficult. We've reverted more into just an easy money market where you need to hit the layups and shoot the free throws. Many traders are struggling in this market. I know 7- and 8-figure traders included that have not made the adaptations that they need. They're still trying to swing for the home runs rather than pick up the easy money. Struggles come from when you're still trading this as if it was a home run market and it's not. So the time is now again to focus on that easy money. How would it feel to have less stress in your trading? How would it feel for trading to be fun again because you're doing the easy money trades? So these trades are the foundation of every playbook. The way I categorize these are trades that are low stress. These are trades that are replicable, often high profitability, and oftentimes these are scalps and quick inefficiencies. I would say that these should be the free throws of your trading. But the key is you need to make this your easy money. What's easy for me might not be easy for you or others. So the reason why these are so important is that these are the cushion in bad times and they're your crutch out of P&L holes. So let's say that everything's been going fine, but then you find yourself in a tough spot. Maybe a trade didn't work out or you lost more than you intended. These easy money trades allow you to rely on them to build back that cushion. They allow you to hit singles and get your confidence back. Then even in good times, these trades give you the P&L to really parlay those big bets. These can be rocket fuel in good times. These help you build that confidence and create a positive feedback loop where you know that you have money you can rely on. These also reduce variance in your trading. It's okay to go for those home runs, but it's even better if you can go for those home runs with a position of knowing that you already have P&L built up, and even if something goes wrong, you have the daily singles that can help you get out of it. And these easy money trades also allow you to expand your playbook. You're a more diversified and lower variant trader when you pursue these. So let me give you some examples for me. Again, these are just me and play to my strengths. It might not be right for you. And one thing's also worth keeping in mind is that a lot of trades can be cyclical. These don't necessarily work in all markets, but there are certainly markets when they do. You need to only be playing these trades when they're in play and working. You don't blindly go after them whether they work or not. So as I mentioned, NASDAQ witching imbalances are where I really got started. These are often order flow imbalances where some institution might be trying to rebalance or an ETF might be rebalancing. And what happens is you might get large buy or large sell imbalances that come into a stock. And so essentially, in order for the market to pair off, the opposing order flow needs to then match that. So you might get a stock like AMD that's generally fairly boring, and maybe that shoots up 1-2% due to this buy imbalance. The way I would play it is knowing that this is purely order flow, I was able to expect some level of reversion once that imbalance pairs. So those types of trades were really, really consistent for me. Another thing that was really interesting is the DOE oil number. You guys will know this oil number as the Wednesday 10:30 a.m. number that comes out and often moves oil. It's the U.S. inventories being updated. So especially when oil has been in play, whether it's 2014 or back in 2020, those inventory numbers can have a really big effect on the market. So of course the market's not so dumb. There are algos that might play USO and the oil futures, but often there can be a lag between the oil futures and stuff like XOP, which is a ETF basket of oil producers or individual oil names. So a cool way that I would play that is when this weekly oil number would come out, if oil went up on this number, I might be able to quickly buy XOP or any of these individual oil names and play it as a quick little scalp play, as those names would go higher in parallel with the move in oil. Another really cool easy money play is big levels in IPOs. IPO trading is some of my favorite stuff that I would do. And especially in a hot IPO market, you can see some incredible moves. There's years like when Alibaba came out and IPO'd, you get these plays where the stock just clearly trends and it just stair steps higher and stair steps higher. So what I'll often do in IPOs is, let's say a stock price is 20. Often that pricing level can be a very, very important level and also get support from the bank syndicate and become a level of resistance. There are a lot of times in IPOs when you can risk mere pennies against those pricing levels with some huge liquidity there and able to scalp that out 10, 20, 30 cents higher, or often even catch points and trends in these moves. Another great example that I love as far as easy smaller money is playing little breakout plays. I would be constantly scanning the market for really tight patterns of support and resistance, or where might there be a seller holding a stock down creating a resistance level. These are places where if you have tight resistance at 10 bucks, you can put your buy stop in and very easily buy 10.01, 10.02 and scalp that out at 10.10, 10.15 and 10.20. And so a lot of these plays really add up. It's not about hitting the home run, but it's about finding and setting alerts and using technology to capture some of these scalps. The other thing that was a common winner for me is playing the level 2 box, or as many would call it, reading the tape. A lot of times what you can see is large liquidity pop in and out of stocks. Maybe a stock is selling off pretty steadily, and then a large institution wants to buy 50,000 or 100,000 shares. There's times where if you're quick and if you're watching for this stuff, you can quickly buy in front of that bid, risking a penny or two and using him for liquidity and able to scalp at 10, 20, 30 cents higher again. There's a lot of ways to do that, and one other common place is when a stock is stuck in SSR, short sale restriction mode, because it's down 10% or more. So often what you can see is a lot of times liquidity will pool up on the offer, and if you can get short quickly in front of that, you can often play a scalp down lower, or there's times where those offers and that liquidity kind of pegs lower. Then as that gets taken, getting long allows you to also play a scalp as that liquidity gets taken and people scramble out to cover. So to make all this even more relevant today, one thing we've seen throughout this whole year, and as I like to call moving to the broken slot machine, probably one of the biggest easy money opportunities this year has been playing the monthly CPI number. This number will come out pre-market at 8:30 a.m. and given that this year it's been such a interest rate driven market and everyone's so concerned about the Fed moves due to their desire to tamper down inflation, this CPI number has led to really huge moves in the market. So how might one play this? Well, the easy way is when this number comes out, the market tends to trend huge as participants need to readjust to the latest inflationary outlook and in turn the Fed outlook. And yes, the NASDAQ or the S&P might shoot super quick. Again, everybody knows there's algos in this. But what you can do is you can find the laggards, right? All the big money is going for the super liquid stuff, but that leaves plays available that they're not looking at. There's small little tech stocks that's highly correlated to the NASDAQ, where when the NASDAQ's shooting down, you can still short these stocks. We've seen laggards in all the big tech names to even to the smaller ones. And these are high beta stocks where you can really catch high probability multi-percent moves. Without spilling all the sauce, these are a huge amount of easy money plays. And look, maybe these aren't right for you, but hopefully these trigger some thoughts on how you can make these your own, or how you can use liquidity, or how you can use levels, or how you can use different catalysts in the market to find some scalps and easy money that you can make your own. So now best practices for implementing this. What might be the quick, easy trades that you're underappreciating? Is there something that you're always licking your lips about that's replicable and you know you can push further? Maybe it's just a matter of $100, $500, $1,000. Maybe it's a little imbalance play. Maybe it's an open order flow play. Maybe it's a little arbitrage play. Whatever these are, I highly recommend you systemize them and build technology and alerts to do more of them. Playbook this and make this your easy money trade. Another way I like to enforce this or cement this is doing a daily report card focusing on capturing these. With some of the S&B Capital work, I've been pushing the traders here to ask themselves each day, what was the easy money trade for me? And when you really focus and reflect on these, it can be such an easy way to build on these. And even in my own trading, for my DRC, which is a template I've shared publicly, every single day I had to answer and reflect on what was the easy money trade. I did this practice for years, right? I don't expect you to be able to make a playbook out of these overnight, especially if you're a newer trader. You're saying to yourself, easy money trade, no trade's easy money. I don't know how to build this at all. And look, it's gonna take time. I understand that. But if you really start to pay attention and focus on these concepts and direct your focus there, it will happen over time. Especially use the examples I gave above to help shift your mind that way. One other thing to finally do is share your DRC with others so they can learn from yours and you can learn from theirs. So many people try to play everything close to their vest and they think to themselves, why would I ever share my easy money trades with someone else? Or why would I ever share this to the FinTwit trading community? Well, the answer is because they might have something more to share with you. A lot of these plays aren't necessarily only one person can trade them. There's room for others in a lot of areas of trading, and those people often will reciprocate. And this allows you to expand and benefit as well. So in summary, fight the bias towards home run trading, especially in this market right now. Easy money trades aren't sexy. They're essentially the workhorse that pays the bills. It might be the $50 here, the $100 there, but even making $100 each day, that can add up to $2,500 per month in trading profits. It's so critical to grow your trading and increasing size and scope when you have these easy money trades you can rely on. So I recommend you build an easy money playbook where you focus on these high probability, low stress trades and make it a part of your DRC to focus there. These are going to be critical for you to fall back upon, especially in tough times. So now that you have this strategy for getting to profitability in the quickest way possible, and now that you've learned the ins and outs of my top 5 easy money trades, you're much better equipped as a trader. But don't make the mistake of thinking that's all you need. To become a profitable trader, there's another absolutely essential skill that you can't do without. If you don't have this skill, there's little chance of becoming consistently profitable. So what is it? Well, lucky for you, I cover in depth in the video appearing on your screen now. So make sure to click on that and watch it because it's virtually impossible to make it in trading without it.
Good morning. Good morning, traders. Thank you for joining us on this WTV special on putting your mind over the market. I'm Jared Levy, Chief Options Strategist here on Wise Trade TV, and using psychology in today's market is not an easy thing to master. It takes a lot of discipline and skill to become a consistent and successful trader. Here to talk to you about what you need to do in order to put your mind over the market is Mark Douglas. Mark has been a successful trader since the 80s and has written 2 books on trading psychology, both Trading in the Zone and The Disciplined Trader. You've heard me talk about them many times here on WTV.
Most trading strategies being taught out there don't really have an edge. This means that even if you trade them with discipline, you will lose money, which means that knowing how to develop your winning trading strategies that not only fit your style, but are actually profitable is possibly the most important skill you can learn. And that's exactly what we'll be teaching you in this video.
In today's video, I'll be discussing Developing Trading Strategies 101. For more videos and content like this, you can follow me on Twitter at @TheOneLanceB. So one of my favorite quotes from maybe the most popular physicist of all time, Richard Feynman, he says, "The first principle is that you must not fool yourself, and you are the easiest person to fool." So what happened was a couple weeks ago, I made a tweet that ended up being the most liked, most favorited tweet that I've ever had. And that really signaled to me that I was onto something that was really resonating with the community. And that tweet was this: my number one FinTwit observation. Most failing traders wrongly attribute their struggle to issues of psychology and risk management. The reality is most have zero edge. They have naively been fooled by randomness into thinking that their wins are edge. This seduces them to troubleshoot the wrong problem. The best analogy I can give to describe this is many struggling are putting the cart, meaning risk management and psychology, before the horse, which is developing and having strategies with edge. Then when it doesn't go, they wrongfully think the issue is the cart and they go on to troubleshoot the wrong stuff. And don't get me wrong, both are important. You absolutely do need risk management and psychology, but all of it is useless if you don't have a true foundation of strategies with edge. No matter how good your risk management is and your psychology is, you absolutely will not succeed at this job. So many people kind of put up, very good counter arguments to this, but the ultimate counter argument that I made is I know many, many successful traders, 6, 7, 8-figure traders that have awful risk management or awful psychology, but they were as successful as they were for one good reason. They have enormous, enormous, enormous edge in their strategies, and that can cover up a lot of that. But if you have strategies with no edge, say you go to the casino every day, whether it's blackjack, roulette, whatever, slot machines, no matter how good your risk management and your psychology are, no matter what you do, you will lose money if you have no edge. And so how did I come to this conclusion? Many were asking me that. And so this is based upon tweets, daily report cards that are sent to me, and direct conversations with an assortment of traders in the retail trading community. I've spoken with probably dozens and dozens of traders. It might be at Traders for a Cause in Vegas. It might be at some of the happy hours I attend. I've gotten a pretty good feel of what the community, what their strengths are, what their weaknesses are. And I've met with people at all levels. And for so many of the traders that are struggling out there, I understand this and I know what your problem is, but so often they say, oh, what I need to work on is my psychology. What I need to work on is my risk management. But when I learn more and ask a bunch of follow-up questions, one thing becomes clear to me. It's none of that. Their true issue is they're not trading strategies with edge. And Bella's noticed the same exact thing. So I feel you, I know how hard it is to build edge, and in response to everybody on that tweet, this is my video to you all, so you can start to build edge for yourself, and I'm here to help.
If you want to learn 3 real-world setups that our professional traders use, including the simple but highly effective setup that we teach all of our new traders, and the setup that turned one of our traders into a 7-figure big money earner, check out the free online trading workshop that we're currently running. This is a 100% free, intensive workshop where you're going to learn more in a couple of hours than from years of online education. So don't miss it.
So what is trading edge? In trading, edge means a trader strategy that is positive expected value, essentially EV greater than 0. And so what's EV? Expected value is the probability you win times the amount gained if you do so. Then you subtract out the probability of losing times the amount lost when that happens. Many beginner traders are fooled into thinking their win streaks are due to their strategy, yet then their loss streaks are due to shortcomings of psychology or risk management. In reality, their trading strategies don't have meaningful edge, and the win streak was just part of inevitable variance. A really great book on this topic is Fooled by Randomness by Nassim Taleb. It's kind of like the Bible when that traders rely on as they talk randomness and black swans and everything else. Very, very popular, and it really hits home on a lot of points that I'm discussing. Because so many traders, you're inevitably, right, if you were to flip a coin and it would be a 50-50 chance of heads or tails, you're inevitably going to go on these win streaks. And if you were flipping a coin and it landed heads, at no point would you think, oh, that's just because I'm doing everything right. Then if it was tails, you wouldn't think, oh man, you know, I just became overconfident, right? But what so happens with beginner traders is they get fooled into overinterpreting their data. Especially, what's so common is I'll hear, oh yeah, I was winning for 2 or 3 months, but now I've been on a 2 or 3 month loss streak. Well, guess what? Odds are that that's just kind of the correction of that inevitable variance. So how do we get you all some real edge? So first, to be clear, edge is rare and most is noise. I really discussed this in my broken slot machine video. There's only going to be a select few tickers and ops that are exceptional each day. Most of trading is a random walk, especially if you're trading tickers that aren't in play. You'll still be right 50% of the time or somewhere around there, but even with individual days with high win rates, that doesn't mean that in the aggregate you're a winning trader, right? It all depends about in the long run and how strong that data is. So how do you develop these strategies? So first of all, a few prereqs. You almost always want to only apply these following methods to stocks in play. These are going to be the stocks that tend to have fresh news catalysts, exceptional technical patterns, or stocks that are doing massive volume with big price ranges. And you also want to be careful of hindsight bias. You can't just simply look backwards and think everything is so obvious in retrospect. You need clear, predictable criteria that you're going to be able to apply in the future in real time. So I made this little table for you all. The way I think about it is there's 4 general methods of kind of developing and finding edge. Now these are not mutually exclusive. A lot of times they can overlap. The first method is observation. Observation is where you're actively utilizing screen time each day to notice patterns, correlations, and predictable price action. And as you can imagine, there's pros and cons of each method. So the pros for observation is it's easy to do during slow markets. It requires minimal mental commitment and it's accessible to all traders. Anybody can do this that's sitting at their desk. The cons of this though is it can have a low hit rate. Oftentimes it can be time consuming, but it might take a while to actually yield anything. You can go down a lot of dead ends, but like I said, not too costly a strategy to find edge, so no harm done most of the time. The second method is hypothesis. Hypothesis is a logical idea that you can then backtest or forward test to see whether it might hold true in the market. The pros of this is it tends to have a solid hit rate on logical ideas, and it's also accessible to everyone. The only cons are it really does kind of require creativity. You really need a lot of brain power to always be thinking up new ideas that are reasonable and rational. And don't worry, I'm going to always get into a lot of examples of these too. So the third method is reverse engineer, and probably one of the most powerful methods. And this is looking backwards at past moves to identify predictable variables and setups that you can use to develop a systemized strategy. The pros of this, it has a high hit rate and high accessibility. Again, pretty much anyone can utilize this using public screeners to analyze big movers and other tools at the average retail trader's fingertips. The cons though is you must be able to identify and properly systemize these so that you can capture them in real time. You need to be really careful of false positives or really developing some hindsight bias, which we can get into. Then finally, the last of the 4 methods is mimicking. And what that is utilizing an external source for trading strategies with the presumption that they have edge. So the beauty of this is probably the most effective and has the highest hit rate and is the highest and fastest kind of path to learning and finding edge. But the biggest con is its low accessibility. It requires you to have a mentor, access to others with edge, or some other source that gives you a profitable strategy. So it really requires someone that's willing to share and your ability to kind of delve deep into that. So now let's further break these down and give you more of an example of what I'm talking about. So observation. Let me tell you a little story of some edge that I found that was through observation. Back in 2016 or so, probably each month we would notice that the gun stocks would just pop out of nowhere one day a month. You know, Smith & Wesson, Sturm Ruger, RGR, these would make some massive trending moves.
we would then try to figure out, why did this happen? Was it a technical breakout? Was there some type of news? We scoured and scoured the internet, and sure enough, having observed these moves, what we were able to find after studying these certain days is a monthly gun sales report was coming out. I can't tell you why this report was so relevant to the market then, or why this was so in play at the time, but what I found out was that each month we were able to find where this report was being released, figure out what the estimates are, and be some of the first to be on top of these really massive moves. And all of that came from observation. I didn't have any hypothesis about this. I didn't have, any other, preconceived notions. All it was is I noticed gun stocks were making a massive move one day each month, and then I did my best to try to figure out why. And a more recent example is a trade I did this year, MSTR. So MSTR was a massive capitulation play versus Bitcoin. And I've written this publicly on my Twitter, but I'll go into it again now. Essentially, MSTR holds a ton of Bitcoin. And so really, because the whole company is essentially just a tracking and holding of the assets of Bitcoin, it really correlates quite well with the underlying price of Bitcoin. And if you see this chart that I pulled up on Bloomberg, for many, many months, MSTR was tracking very, very closely. Of course, it's not going to be perfect. There's a lot of other variables, but anybody can tell that correlation is quite strong. So then, going into the spring of this year, as Bitcoin was panicking and so was the market, MSTR started to hugely diverge from the price of Bitcoin. If you were to look at those numbers, that type of divergence in percentage terms is crazy. So now we're going to go deeper onto some of the charts. So what you found was MSTR versus the price of Bitcoin, given it was just kind of holding the asset, we probably had a 30, 40, 50% divergence from what the underlying was doing. And it was doing this in a very capitulatory manner. And so again, I didn't have any hypothesis. This wasn't anything that I had been planning on doing. The only way I found this trade and was able to make this long capitulation trade in it was simply by observation. I had noticed how strongly MSTR was selling off versus Bitcoin. So because I was watching that, I was then able to structure this trade and set that up. For the full details, please just check it out on my Twitter. Kind of goes beyond, multi-page details that I can jump into in this video. But that was an example of another trade I found this year solely due to observing the market and wondering, why is a stock moving down so much more than Bitcoin? So now, hypothesis. Let me give you a couple of examples what this is like. Example number one, if the market and IPO market in particular are very strong and hot, do IPOs that hold above their pricing tend to trend higher on day one, right? So I've not observed anything. All I have is a logical hypothesis, right? If the market is very, very strong, if the IPO market itself is very, very strong, is it a safe assumption to think that these might trend higher over time if already exhibiting positive bullish signals? The second example is, hot IPOs that are strong all day and finish strong, do they have positive EV if you overnight them for a gap up? And you might think these are pretty easy, simple hypotheses, but the reality is these have really good edge. These are both strategies that I have traded in the past during strong bullish markets. Another example is in the current bear market, do excess gap ups tend to get sold off? Essentially the inverse of buy the dip. Do people now sell the rip? So what I'm doing is I'm using logic. I'm thinking about something that makes logical sense, right? In a bull market, IPOs tend to go up regardless. So in an extra strong and an extra hot market, is there an actual actionable trade? And vice versa, in a weak market, can I actually do the inverse of buy the dip? These are very logical hypotheses. It's very simple then to kind of collect your data, monitor these, and build a database of such a thing so you can analyze it quite analytically and quantitatively. And so then next, we're going to analyze reverse engineering. This involves finding the most exceptional moves in the market each day and then documenting them, studying their charts and categorizing them to identify patterns and common variables. So one way to go about doing this is you can create scanners based on stocks up or down the most and that day, or maybe by various market cap levels. Maybe you can study the ones up the most each week. You can study stocks that are doing the most volume versus normal. And what you can do is start to look for patterns in this. You can use a program like Evernote to build a database of charts and categorize them by those patterns, then try to isolate the various variables over time. Maybe the stocks that are up the most over the last month are all low float stocks. Or maybe the stocks that are up the most are all energy. Or maybe it's growth that has been screaming back. And you're able to start to suss out those variables. So let me give you a more concrete example. One of the craziest moves of 2022 so far was in HKD. So let's reverse engineer that. So I'm going to take the chart on the left, and that's just the daily chart. And what we're going to do is we're going to look back and we're going to isolate where the move started. So then we're going to try to document all the variables of the pattern and start to build this database. So HKD was a low float IPO. Recently in 2022, these had all been ripping way above their pricing. And so in this specific daily chart, when I zoom in, what happened prior to that really parabolic, insane move is we had a huge volume breakout a few days prior. We couldn't pull back, and then we break out again to highs. And what's so interesting is what must have happened is in a low float stock like this, after the big initial move, you end up a lot of people short. It tries to pull back. Then when we break out that second time, so many people that are short can end up trapped. And so what I would do is I would be taking these charts, I would be tagging them in Evernote. You know, it could be low float IPO, it could be daily breakout, it could be, intraday aligning with the daily breakout. And what I also noticed is using a trailing stop of daily bar lows would have allowed you to at least hold and capture this move. So again, it's just one data point. I'm not going to make it a strategy. I'm not going to think I'm done yet, but all I'm going to do is start to build up this database over time. And you can start to do this for mean reversion plays. You can start to do this for breakouts like this. You can start to do this for IPOs. You can start to do this for whatever was making the biggest panic moves, whatever was making the biggest up moves, whatever was trading on the biggest volume. You can figure out and reverse engineer why those happened. What are the commonalities? Do they all need good volume? Do they all need to have high short interest? Do they all need to have low floats? So that's kind of what reverse engineering tends to be about. And then the final strategy is mimicking, or as Bella would like to say, copy the masters. And while mimicking or copying the masters might have a bad connotation, there's absolutely nothing wrong with it. There is no award you get for having the most original strategy. The reality is every successful trader has stood upon the shoulders of the ones that have come before them. There's nothing truly innovative this day. It all comes from learning from others and making it your own. And so part of the power of working at a firm and having, say, a trainer like I did, or having a mentor or a team to provide for you is like they give you that environment and they give you their strategies. You're able to see what are they trading and why. You're able to ask them detailed questions. You're able to learn from firsthand from Traders with Edge. So this is an extremely powerful resource. But keep in mind, even if you're on your own, you can utilize resources like the SMB YouTube channel or their training camp program. You can find a mentor, or you can begin to copy and document published strategies. Even on FinTwit, there's many amazing traders that have published their swing trading strategies or even their intraday strategies. Then even in books, you have tons of systems like the O'Neill system that have been documented. So don't feel bad about mimicking. The beauty of this is you know that these strategies worked at some point or still do, and you can study them and understand the logic, and you have the power of essentially expertise handing this down to you. It's a very valid way to build the framework for your own. So now where do you go from there? So from there, it's all about developing out the strategy. Like for starters, you can be testing different types of exits. What if I were to use a time stop and say hold for 5 minutes or 10 minutes or for 1 day? What if my stop was price-based? For example, maybe I was going to make a trailing stop using the prior bars, the prior 2-minute bars, or maybe the prior daily bar. Or it could be indicator-based. Maybe I want to be long as we hold above VWAP or a moving average. So all those types of things you'll want to test out once you get the foundation of a strategy. It's so important to be identifying and refining all the variables which might make it better or worse. Let me tell you the story about a trader that told me he crushes IPOs. I had looked through his data and he was hugely biased. He didn't crush IPOs. If there were, say, 20 IPOs that year, he crushed 4 of them and was negging the 16 others. So let's say he made 100 grand in the 4 really crushable IPOs and lost, say 5 grand in each of the 16 others, his performance wasn't that impressive, but he was missing a very key variable, and that key variable ended up changing his trading and really transforming him into an awesome trader. And that variable is he was crushing the hot IPOs. You know, the IPOs like when Alibaba came out and we were in a super strong bull market. He would trade those really, really well and make a lot of money, but a huge chunk of that money he would then lose and give back on all the IPOs that weren't hot. He had it in his head, that bias that, oh, I'm a good IPO trader. And that just wasn't quite refined enough. The reality was he trades the hot IPOs really well and needed to avoid all the rest. And that can really change your performance. Then finally, it's also important to set up alerts and scanners to help you proactively capture these setups. You always want to continue documenting and refine. Building massive databases in Evernote of all the charts and all the write-ups of this will really help you succeed. So look, I understand this probably barely scratches the surface, but the reality is videos on this topic are really time intensive to prepare. I also don't want to overwhelm anyone and go too far or too deep into the weeds just yet. Do you want me to dive deeper on this topic? If so, comment below or let me or SMB Capital know on Twitter at @TheOneLanceB or at SMB Capital. If there's a demand for it, I'll make this a multi-part series and really start to get into the weeds. I'll give you more examples and really start to go through how you can categorize these trades, how you can suss out the different variables, and how to continue developing edge. But this at least will hopefully get you started. So let me know, and I can't wait to hear from you all.
So you're an active trader, not doing as well as you want, not doing as well as you deserve, and you just can't figure out why you can't become profitable no matter how hard you try. Well, let me show you why. This is your competition. The traders in this room. This room right here is full of elite traders, some of whom are making 7 and even 8 figures a year. In fact, our top guys have made
receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day.
All right, we're getting ready to make our plans for Monday.
You are powerful. You attract
Getting ready for Monday's plans. Coming up soon here. Right after this quick little break. We'll be right back with Monday's trading plan.
You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused.
This is it. This is the meat and potatoes. This is what you came here for. This is the plan for next week. Are you not entertained? This is not a game. The kick is some underscore real underscore change underscore. Real plans being made right now. This is not a drill. This is not a drill. It's not a drill. This is not a drill. I swear it's not a drill. Next week is the week of what? Let's start off with that. What's next week? August the 8th. Friday, be August the 8th. August the 8th. Expiration. 8th expiration.
have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources.
That's right. 6018.
You are highly
If we go down, we dropping.
You have the ability
That's right.
to make large amounts of
To
money.
the 6018.
You achieve
And I want some of it.
You are focused.
Gotta get some of it.
Money easily in
So I will be taking a weekly put with an expiration date of Friday, getting in at a 618, specifically the 617, taking the 618 put, getting in at 617.3, adding that 616.3, getting out at 601.8.
You choose
Yes.
your thoughts.
Cannot wait to replay this.
You receive money every day.
Remarkable.
You are wealthy. You are rich.
Let's keep grinding. We're not over
You
yet.
attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master.
Damn, I forgot what I was doing on this chart.
You are You are successful.
What was I doing on this chart?
You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of income. You are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day. You are wealthy. You are rich. You are powerful. You attract money. You deserve
Okay, and just like that,
surrounded with money. You have
those are my plans for next week.
You are highly driven and motivated to succeed. You have the ability to make
My plans for next week.
achieve whatever you
I
set
do
your
not
mind
have daily plans yet.
to. You attract
My
money
weekly
every
plans
day. You are a money master.
are as follows.
Good having money. You are prosperous.
I want a 618 call. I'm sorry, put. 618 put. Believe we can take it all the way to the 601.
You choose.
And if I do take a call, I want a weekly call next week. I want a 632 call. And I believe we can take it all the way to the 638. Woo! Not a lot,
Deserve money.
but it'll pay nicely.
You have
Just letting it do its thing. I just want to key in on a good entry
You are highly driven and motivated.
at a high probability area. Now let's go into Monday. We got in for the week.
Whatever you set
Now let's go in for the day.
focused. You attract money easily in every way. You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are
Yes, sir. We are in a control buying algo,
you are wealthy. You are rich.
but we do have the possibility of breaking it.
You deserve.
And if we do,
You are surrounded with money. You have multiple sources of income. You are
I need
abundant.
to change this
You
color.
are highly driven
Color,
and motivated
color,
to succeed.
color.
You
What
have
color I
the
want to
ability
change
to
this to?
make large amounts of money. You achieve whatever you set your mind to. You are focused.
What's a good
You
color
attract money easily in every
to
way.
change this
You
to?
are a money master. You feel good having money. You are
Red?
prosperous in every way.
How about
You
that?
are
Red?
successful. You are a
Okay.
millionaire. You attract all the money you desire. You attract people and situations that will help you. You choose to be wealthy. Your thoughts are positive. You receive money every day.
Let's see.
You are wealthy. You are rich. You are powerful. You attract money. You deserve money. You are surrounded with money. You have multiple sources of
That
income.
looks a little
You
retarded.
are abundant. You are highly driven and motivated to succeed. You have the ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way.
Okay.
You are a money master. You feel good having money. You are prosperous in every way. You are successful. You are a millionaire. You attract all the money you desire. You attract
Why is this thing
people
not
and
acting right?
situations that will help you. You choose to be wealthy. Your thoughts
It's not
are
allowing me to
positive. You receive
do my
money
thing.
every day. You are wealthy. You are rich. You are powerful.
Maybe I need a little
You
more room.
attract money. You deserve money. You are surrounded with money. You have multiple sources of income.
Why is it going crazy like that?
You are highly driven and motivated to succeed.
Let's
You
go,
have the
mouse.
ability to make large amounts of money. You achieve whatever you set your mind to. You are focused. You attract money easily in every way.
Down.
You are a money master.
Oh
You
my
feel good
goodness, this thing is
about
really acting
You
up.
are prosperous in every way. You
I don't
are
like it.
successful. You are a millionaire. You attract all the money you desire. You attract
That's my mouse problems. Okay. Best I could get. Brooke Sanchez. Okay. So this is what I'm looking at for the week. I'm looking at a 632 call. I like to take that all the way to 638. And for a put, I'm looking at a 618 put. I believe we can take that all the way to 601. I am now going to go over my plans for Monday. Bear with me. Start off with the week. Now I'm moving from the weekly down to the daily. What a day it was. Okay, let's check the day. Again, still inside that larger control buying algo that I showed everyone. See if I can show it here. We have Heikeneisch's. No. Oh yeah, they do. Aha, you can see it perfectly now. This is the daily chart in Heikeneisch's. You can see that beautiful controlled buying algo. You can also see the dips that we have taken now to the bottom of it. So even last week's dip is still inside the controlled buying algo. Even last week's dip is still inside that controlled buying algo, and you better be careful. You better watch out. You better not pout. You better not have any doubt that the bulls are still in control. When we look at it in a larger scale, you can see the beautiful controlled selling algo and that nice structure that was there. Let me go ahead and add that for context, even though it was faded out. I'm going to bring it back. We're going to bring it back as the market was in a beautiful controlled selling algo through the late month of April, all the way really starting in March, all the way through May. We then hit that beautiful double bottom with the lower high. Also my significant, I call the lovely letter H. And from there we started a beautiful controlled buying algo. Simply marvelous, marvelous. Go ahead and show that to you real quick. Can't thank you for tuning in. Whether you tune in now or you tune in later. Whether you watch the replay now or you watch it later, your attendance is appreciated. And I want to say thanks. Now I want to show you this controlled buying algo as it was presenting itself here. And let's change the color, shall we? A little magenta. There you go, girl. Once we got out of that beautiful controlled selling algo, you can see there with the Heikenai, she's definitely in control. And then you can see that double bottom. You can see the change in structure with the higher low. Beautiful liquidity with the making of a new high. Going right up into a very strong control buying algo. And then we had just a little bit of shift. And that shift brought us down right here to the bottom of that control buying algo. Well, ladies and gentlemen, as we started to go into a new month, I said, let's go ahead and reorganize this algo. So we organize it. We reorganize it using that same pivot right here. And in fact, I think I'm going to highlight it just a little bit more to get more right exact. And there we have it. Now let's do the flip-flop. Let's fade this one out. As we fade that one out, we're going to bring this one into more context. Hey, let's go ahead and change the color. I like that magenta. There it is. The new controlled buying algo with the same pivot. The same pullback area, the same result happening from that. Every time we touch the bottom of that algo, engulfing candle. It happened here. It happened here. But will it happen here? That's the difference. That's why I'm looking at this area for a potential weekly put, not just for the day, but for the whole week. There's a lot of money on the line. A lot of money is on the line. As well with the continuation to all new highs using last week bears as liquidity. Bear covering is buying. Bear covering enters the market as calls. Bear covering enters the market as call orders, causing the market to go higher. We get above that 632, you better believe that's where you're going to find me in a big call. Going to the 638 at least. Inshallah. But because coming down to the bottom of this control buying algo, we haven't seen activity like this before. We've seen the market work its way down day by day by day. Even here, day by day by day. This is one day to the bottom of the algo. One day to the bottom of the algo. You better pay attention going into August, which typically is a month where the market might have a little pullback in preparation to go ahead in the fourth quarter. Pay attention. August is a little funny. We ready on both ends. As we now get ready to analyze where we want to go, particularly Monday for the day. We on a 30-minute chart now. Let's zoom it on in. We got to get out of Heikenashi's, go back to the regular candles. Let's see what's good, what's really good around here. Strong move to the downside after we had that big gap. But after we had that gap down to the 621.8, we then went sideways between the 621 and the 623. A little bit above it, a little bit below it, but pretty much sideways action. And that is how we ended the market in the 621.2 area. So, this algo is of no significance right now. In fact, I'm not even going to acknowledge it. If we look left, we see some very interesting things. If we look left in the same area, you see what I'm seeing. I'm seeing where the money is. I'm seeing where the money is. We're going to cross-reference it. We're going to cross-check it. I hope you're making your plans too while I'm making mine. Let's compare. I hope you're making your plans while I'm making mine. And let's compare. Two areas of delight. The heck? Okay. Alrighty. Two areas of the light. Let's start with it. It's going to be a strong level right there. Strong level. Also looking at my interest for the put as well. Making sure that's still good. Yep, on a 618 put. $617.3. 616.3 add. Big gap. 616.3 add. Just for the week though. Yeah, I see it. Gotta let that go. Can't look at it. I'm looking at 30-minute chart. Let me go back to the day. My interest is for the day. It's at 619.3. I don't really like it. I don't know what our pre-market action could be like. Ain't no doubt at the 617. The same area I want to get in it for a weekly put is also the same best area to get in it for a daily put. Get it a little higher. Ironically, it's a good area to get in both of them. Be breaking the control buying algo. Also breaking a monthly support area. A previous monthly support area. I like it. There could be some aggressive plays in there, but I don't know if I like any aggressive plays. Let me see something. Possible. Let's go back. I gotta leave it at that. The only thing I gotta change is possibly if she comes down past the 619.3 pre-market. If she comes down past the 619 pre-market, then everything could possibly shift. And then we'll be looking at a 6. Let me do it too. I'm gonna just put it out here. A secondary plan just in case the market gaps down. $6.18 with a 6.17.8 entrance. 6.17.8 entrance. $6.16. 5. 6.16.5. I want to take profits during the day. For the week, that's where I want to add. 6.16.5. 6.15. That's 6 for the day. Okay, I like that. A call for the day. I don't see it. All this had to be liquidated. Just going off the levels. $6.25. 6.26.4. 6.27.5. 6.28.7. There you have it. Just like that. Now let's cross-reference them with the big charts. Just like that. We put that plan together. Just like that. That's the plan for the day and for the week. Gonna be huge going into next week. Huge. Next week is going to be huge. Next week is going to be a huge week. Remember, I told you first. Next week is going to be a huge week. Now let's go look at the daily. Big gap down. That's that indicator I was looking for too. Incredible. Incredible. Okay, adjusting my calls a little bit. I want to get in at the 626.5. Believe we can go to the 628. Believe we can go to the 630. Secondary area for a call. Secondary area for a call. Monday, that's the only place I would like to take a call. There are some spots earlier, but only other secondary spot I would like to take a call at on Monday. The only other secondary spot I would like to take a call on Monday is going to be $620 call. $621. 8 entrance. Take it to the 624. And then 626 too. A little space in between them. There you go. 2 possible entrances for a call. 2 possible entrances for a put. And a possible weekly trade. 2 possible entrances for a call. 2 possible entrances for a put. And a weekly trade is on your screen. There you have it. Brooks says he putting his plans on the kick. Okay. He says so far he's looking for a call around the 623 after a break and retest. Okay. And for a put, we're going to possibly be at the 620, more conservative 619 area. 619.3. Wow, nailed that, Brooks. I agree with you wholeheartedly on that 619.3. Again, we are making plans over the weekend, and you know how these things can change. I think the best put is going to be the break and retest of the 618 area. Okay. I like it. I like it. He said, I think the best put is going to be the break and retest of the 618 area. And it is also wide with that break and retest of the 618 area at the 617.8, which is why I want to enter into a weekly put. So I do agree with you there, Brooke. Thank you for sharing your plans on the kick. And on YouTube, he said, so for a call, he's looking at the 623. Depends on what we gap up or gap down. My plans might change. That's the vision for now. Conservative call, he likes 620 above the 626.3. I like that too. 626.5 I have. And there we are. I'm just checking a couple more things before I stamp these plans. That was the daily. I have to go through my process. Let's pull up the 30. Pull up that dirty 30. See what that dirty 30 looking like. See that. It's definitely profit taking area 616.5. Even from a weekly put. It's gonna be something right here. Interesting. I am. Allahu Akbar, Allahu Akbar. Allahu Akbar, Allahu Akbar. Ashhadu an la ilaha illallah, ashhadu an la ilaha illallah. Ashhadu anna Muhammadar Rasulullah, ashhadu anna Muhammadar Rasulullah. La hawla wa la quwwata illa billah, la hawla wa la quwwata illa billah. La hawla wa la quwwata illa billah, la hawla wa la quwwata illa billah. Allahu Akbar, Allahu Akbar, la ilaha illallah. Allah is perfect, calling, prayer, and established Muhammad and received enough of me. Made some position, but can't back over. She promised a very few promises. Amen. Okay, now, okay, I am going to change my plans a little bit for my weekly put based on this. Piece of hands in the building. Shout out to you, fam. Thank you, bro, for joining. I do like this level, though. 6, 17, 8. I like it to get involved early. You know it's going to be some friction here at the 6, 16, 3. Which is why you want to add there. But you know she could turn around and bounce here too. If you really want to get funky for a big money put, it's got to be below the 6, 16, 3. Like it who like it, don't like it who don't like it, but it's got to be below the 6, 16, 3. It's got to be below the 6, 16, 3. It's got to be below the 6, 16, 3. And then we get below that 6, 16, 3. We can add it to 6, 11, 2. Add it to 6, 11, 2. Take some profits at the 610. And maybe put a trailing stop after that. That's where I see that at. So I just changed my weekly put. I want to get into 6, 16, 3. I believe we can go down to 610 with no problem. Very easy money put, big money put. Can sleep peacefully here at these ranges. Even 6, 17. And being I'm going closer, I'm going to stick with that 618 put. I like that. Yep, that's what I'm looking at. I like that. Alrighty, so that is pretty much going to wrap it up for me. I'm going to just check one more thing. But that's the 30 minute. I want to check that view on the 30 minute. I always want to go to the larger time frames. So, like that view on the 30 minute. On the 5, I don't really think it matters because we already looked at it on the 30. On the 5, it's not going to really matter. Okay. Yeah, it's not going to really matter. Same view. Just a lot clean on the 30. Or as Brooks likes to use, the 4 hour. That 4 hour chart there. Looking at it on the 4 hour. And here's that 616 4 area. You see that support here? I'm going to the 4 hour because our teammate Brooks likes to use it. And I'm glad that I did too, because look what I just saw here that really solidified what I'm saying about why you can't really get into a solid put until under, and I changed it to 616.3, and you can see it very clearly here on the 4-hour chart. Look at this support right here. Right there. There is all the bullish support. And that support was backed up by this. Everybody know what this is? You've heard me. You seen me type it in there before. Hello. Washout long. That's a washout long. That's a washout long. A bunch of bears trapped. Bunch of bears trapped. If they didn't get out on a 611, the 611.3. And I'm pushing it because I said on my profits I like to go to the 610. I'm pushing it. I take what the market give me. I said at 611.3, you see a support there too. Looking on the 4-hour, I'm adjusting that profit target just simply off the 4-hour. Beautiful washout long on the 4-hour. Gap up, retest of that area. Okay, after we retested that area, this monthly support is why it's in purple of this 616 area here, the 616.3 is a monthly area of support, and you can see the market sitting on it. Let's blow it up. I'll make sure everybody can see it. You can see the market sitting on this area. We had that gap up from that washout long, and after that gap up, the market came down and sat on this monthly support area. She traded below it, but she closed above it each and every day in her move higher. Came back, retested another monthly support area, went on her business. Came back, retested again another monthly support area before she went on her business. And again, you've seen it before. Call it what it is. Wash out long. Catch the bears, squeeze them. Same thing here. Hello, wash out long. Catch the bears. Squeeze them. It's beautiful. Man, I'm liking this 4-hour. I'm liking this 4-hour. But that's also why I want to wait until we get underneath that 616.3 area for a big money put. I want to wait until these guys are in trouble. This is where my money is coming from. These guys right here. Who's got my money? These guys got my money. So for a big money put, I want all of these bulls that started and supported this run up to new highs from that 616.4 all the way up to the 639.8. All of them that supported that, I want to wait till they get in trouble. And they want to start taking money off the table. That's where you'll find a big money put. And we're not too far from it. Might take a couple days to get there. But if we get there, boogity bob, it's a lot of liquidity right here, buddy. We want to, we want to, right there, buddy. And guess what? That's also the area that we will be breaking this control buying algo. Let's look at that. Let's put it on Heikinashi here. See the flow of it. Look at that. That's also the area that we could be breaking that controlled algo. Might take a couple days to get there, but this could be beautiful. Thank you for our chart. Alrighty. That will conclude our weekend studying, where we have gone over all of the trades that we took this week. Our winning trades, our losing trades, and trades we should have taken. Thank you for that. As we come into a new month of August, and we look forward to another month of exciting trading. We invite you to join us by way of subscription. That way you'll be notified when we go live. Please subscribe to the channel. And if you're on Kick, please follow us on Kick. Doing so helps us out greatly as we look to add on our team member, but we need at least 5 viewers on Kick. So hopefully, I've seen us get there before. Hopefully Monday we'll get that, and then we'll be able to team up as the views on YouTube continue to grow. We're grateful for those who watch the replay. Well, that is all for now. Again, in my conclusion, 2 plans for a call, 2 plans for a put, and a plan for a weekly call and a weekly put. We'll get back on here Monday morning at 8:30, God willing, to see what has happened pre-market and see how we need to adjust our plans. This is Abdul Shabazz. This is some real change. I'm so grateful for you.